Let's talk about why the Fed cut rates. I think if you look a little under the hood, there is the reality of significant floating rate debt resetting in both commercial real estate and the levered loan market that the Fed now needs to get in front of before that becomes impactful in financial conditions. And in other words, becomes more tightening than they intend. And the Fed is rightly describing their current position as restrictive, and the Fed rightly is trying to move to neutral. In addition to those issues, floating rate debt resetting and trying to accommodate with a lower rate, I believe that the housing market is a major issue. My basic summary as to why I believe they should have cut rates: they have a restrictive approach and they need to have a neutral one. That's point number one. Number two, I would add the catalyst for Fed easing, trying to get in front of the loan resets in commercial real estate and levered loans. Number three being the housing market, that there is a seller's strike, that the Fed attempting to use monetary policy to nudge housing into a better situation of affordability, to not allow the housing adjacent parts of the economy to slow, bring GDP growth into a further vulnerable place, is a legitimate issue. The data is, though, clear that we're not seeing hirings. And then because of the way that monetary policy has lags, I think the Fed getting in front of that is important.